All right, let's dive in. Today, we're tracking a huge shakeup in the world of financial tech. We've got a Brazilian giant making a play for the US, a meme stock app getting into social policy of all things, and one of the old guard reminding everyone who's really boss. It's a lot, so let's get into it. And honestly, that's the perfect way to put it. It really feels like the whole system is getting a hard reset, With these massive stories dropping from three totally different corners of the market all at once. So let's unpack our first big story. First up, we've got to talk about Nu. Now, if you follow global finance at all, you'll already know Nu is Latin America's biggest, most buzzed about digital bank. Well, they just made a move that could completely upend the game right here in the United States. So here's the headline. Nu just scored conditional approval for what's called a de novo national bank charter. What does that mean in plain English? They've basically got the green light to build their own federally regulated American bank from scratch. This is a huge, huge deal. You see, this is a massive strategic pivot. For years, most fintechs in the US have had to use this banking as a service model, where they basically rent a license from a real bank to operate. But with its own federal charter, Nu gets to bypass all of that. They don't need a partner. They are the bank. That means they can go head-to-head with giants like Chase and digital players like Chime. Now, this isn't going to happen overnight. The approval is conditional, which means the clock is officially ticking. Nu has about 18 months to get all its capital together and officially open for business. But make no mistake, the biggest hurdle, it's been cleared. And I love this analogy because it just perfectly captures the feeling right now. For so long, foreign fintechs have kind of been on the sidelines of the massive US banking world. This move, it's like a powerhouse team from the Brazilian league just got a spot in the Champions League. So the big question is, are the home teams ready? Okay, so we're going from a brilliant strategic play to, well, something a whole lot weirder. Let's talk about Robinhood. The app famous for meme stocks. It turns out they might be getting tangled up in American social policy. And yeah, you heard that right. A stock app for babies? It sounds like a joke, but this is a real conversation that's happening right now. So what on earth is going on? So it all comes from this proposed government act that would create what some people are calling Trump accounts. The basic idea is to set up investment accounts for children, and the federal government would actually kick in money to get them started. And here's the twist. Robinhood is apparently being considered as one of the companies to manage these accounts. And we're not talking about some abstract idea. The proposal puts a real number on it, a $1,000 contribution from the federal government for every single eligible child. That is a serious injection of capital for the next generation. Now, think about this from Robinhood's perspective. It's pretty crucial. If they land this deal, they could literally lock in millions of users from the moment they're born. This social policy becomes this incredible government-backed pipeline for new customers, setting them up for an entire generation. Honestly, the whole thing feels like a plotline from the TV show Succession, doesn't it? It's just this chaotic, historically bizarre mashup of politics, social programs, and Wall Street tech. A meme stock app could become a literal part of the financial foundation for America's kids. It's just wild. Okay, for our third and final story, we're shifting gears from the new and the weird to the powerful and the, well, persistent. Because while all these fintech disruptors are out there making noise, one of the original giants, Mastercard, just dropped a reminder that they are not going anywhere. And hey, you don't have to take my word for it. Just look at these numbers. Mastercard's latest quarterly results absolutely blew past what everyone was expecting on both revenue and profit. The market, as you can imagine, went wild, and the stock popped. So what's their secret? Well, it's a few things. First, people are just still spending money. Consumer spending has stayed surprisingly tough. Second, international travel is roaring back, which means people are swiping their Mastercards all over the globe. And finally, it's just a powerful reminder that those old-school payment networks, they are still the bedrock of our economy. This is the perfect way to think about it. You've got all these new, flashy fintechs getting all the hype on social media. They're the cool indie films. But Mastercard? It's that massive, reliable blockbuster franchise that year after year just quietly goes out and makes $1 billion. Hype is one thing. Cold, hard cash is another. So we've had a bank invasion, a very weird political jackpot, and a legacy titan flexing its muscles. Let's try to connect the dots and figure out what this all really means. Here it is in a nutshell. New is coming to the US to directly challenge the big banks, and it could totally reshape the competition. Robinhood has this bizarre, once in a lifetime chance to onboard an entire generation through a government program. And Mastercard's killer earnings prove that the average consumer is still spending big time. Which, of course, brings us right back to where we started. The whole fintech map is being redrawn right in front of us, driven by pure ambition, bizarre politics, and just plain old consumer habits. It leaves us with one big question to chew on. In a market this wild and unpredictable, who's next to have their own reset moment? Thanks for tuning in.